Welcome back, everybody, to Getting Your Shit Together. I'm Jerome, and this is my, or I'm his co host, or he's my co host. I don't know, whatever. There's Neil on the other side of the screen. Um, in this segment, we're actually going to talk a little bit about something that you've probably heard about, and almost every time you do hear about it, you get some bad taste in the back of your throat, or your ears start to ring, or it immediately makes you want to go to the bathroom. It's alternative lenders and alternative financing. Um, Neil, do you want to maybe just touch on what is alternative lending?
Yeah, so I think all of us have probably heard about the big banks like the RBCs, the TDs, the Scotias of the world.
Yeah.
And quite a few, or a lot of times, homeowners, either prospective or existing, approach these lenders or banks looking for a mortgage. Now, depending on their situation, either they have a good income, not so good income, good credit or bad credit, there could be situations where uh, somebody is denied a mortgage, or they
Mhm.
do not get the adequate mortgage that they were looking for, or they cannot get financing for a property because the property is not in a so good condition that the bank doesn't want to lend. And so these situations need not be the end of the world, need not be a roadblock, as long as the homeowners are conscious enough of working with a mortgage broker who can give access to lenders outside of the big banks who
Yeah.
might have unique solutions available for you. Not all lenders are the same, and there are different lenders out there with different appetites who can help in given situation. So this is the world of alternate lending, or commonly known as B lending, private lending, and that is what we're going to talk about.
Yeah. Wow. I don't know that we need to say much more than that. That was a really good introduction.
I'm sure there is more to talk about. Let's get into it.
Yeah, no, absolutely, absolutely. So, uh, big bank lending, everybody thinks of first, right? I got to go to my bank. I've got to do this because that's what we've always done.
Mhm.
And oh, they said no. So now what? Now we're stuck in this. Okay, well, do I wait? What do I do? Like the bank just said no. Now what? Everybody gets left in this sort of a scenario where when a bank turns you down or denies you for a mortgage, they don't always tell you why.
Yeah.
And so you're sitting there going, well, is that it? Am I just done? I can't get a loan. I can't get a mortgage. Well, no, that's not it. That's not the end.
Mhm.
Let's look at why they said no, because maybe it's the bank and maybe it's not you. Maybe it's them,
Yeah.
really.
Yeah.
Um, and in these days, with some of the policies that are in place for lending criteria, a lot more people are having to look at alternative options because 5 years ago they qualified no issues at
Mhm.
all, or 10 years ago, because here's the thing: 10 years ago when people got a mortgage, to qualify for a mortgage then was very, very different from where we are today. Very different. And all they had to do was take 2 5-year terms. The first 5-year term that they got the mortgage, which is very, very common. And then they decided at the end of that 5-year term, I'll just sign on the line with that lender and I'll stay with them because, hey, they offered me a good rate.
Mhm.
But now here we are 10 years down the road, and to qualify for a mortgage is very, very different from what it was.
Yeah.
So a lot more people are finding that they don't qualify with the big lenders anymore, the big banks. And
Yeah. Regulations are definitely tightened. They have changed over time. Home prices have increased.
oh
And
yeah,
so qualification gets more and more difficult. In fact, as a percentage of homeowners, I believe year on year, the percentage of homeowners who are qualified with the bank has been coming down.
yep, yeah, yeah, for
Right.
sure.
And again, it is not as if all banks are all the same. I know different banks have different lending criteria. For example,
Mhm.
one of the banks will give a mortgage only for five different properties.
Yeah.
If you have more than five properties, they will outright decline it.
Yep.
There are some banks who will give you a mortgage for up to seven properties.
Yep.
So depending on what you're trying to do, you will find discrepancy even within the big five banks in terms of what policies they allow and not.
Yeah. Yeah. So so let's go through some reasons why people would need to look at or consider some alternative lending. And
Mhm.
I'll touch on one of the first things that usually comes up with a lot of people fairly
Yeah.
quickly, and that tends to be credit, right?
Mhm.
I won't get into categorizing people by age or by any socioeconomic situation or anything like that, but we've all had our bouts with credit and we've learned our lessons, if you will, and some people learn it quicker. But
Mhm.
oftentimes, credit tends to be the one thing that pushes people towards that alternative financing. The thing that I want people to understand is that even though you may have less than perfect credit scores, the alternative lenders are going to say, "Look, we get it, we understand things happen, and we're here to help." And of course, they are here to make a little bit of money at the same time. The one thing that I always want to point out to people is that alternative financing, in most cases, isn't permanent. It's
Yeah.
to bridge a gap. And we're here to help you try to figure out what is the gap. With credit, it's to get you from where you are today to where you need to be so that way we can then get you into the more cheaper financing options afterwards. So,
Mhm.
credit tends to be the one first thing that most people think about when they hear alternative lending.
Absolutely. And again, I
What's
think the big
another?
five banks will not look at anything less than what 650, 680. If
Yeah,
you happen to have a score below that, then of
yeah.
course,
Kind of
very
like
less room to do anything.
if you sneeze and fart at the same time, you're not going to get a mortgage with them because you've blemished,
Yeah.
right? So what's another reason to for someone that they might need to get alternative?
Yeah. The second most common reason is the kind of income or the sources of income that you have. Most typically that we see is that if you're self-employed
Yeah,
and incomes fluctuate year on year,
yeah,
then you may be looked at not so adequately by the big banks. And
hmm,
so you might have better options in the alternative lending space to get the mortgage that one might require. So if you are, as I said, a self-employed person with 2 or more years of business history, maybe even lesser in some cases,
yeah,
we would be able to get options within the private or the alternate lending space
yeah.
to get a suitable mortgage.
Probably, or maybe not probably. Possibly more often, we're finding that people who are more recently self-employed,
Mhm.
they've left a full-time job to go into something where they're doing the same type of work but don't have a long history in the self-employed.
Mhm.
Alternative lenders tend to stand out for
Yeah.
those types of borrowers
I
because
see
they
a
get.
lot of that within the IT professional space. A lot of
Yes,
people who are working for big employers leave and
yep.
do a consulting job or business on the and they might find difficulties getting a mortgage to a bank.
Yeah, they gave up a slightly lower paycheck in order to take better control over their overall finances by billing people.
Mhm.
They get paid more, but unfortunately, it takes a little bit of time for that to really flush through on the paperwork provided by CRA, and so sometimes that short time is a great is
Yeah,
a great
they,
opportunity.
they probably just need a bridge before they are able to qualify with a
Exactly, bridging a gap, uh,
yes.
right? Time.
How about speed?
Oh, yeah. Uh, Anybody ever dealt with a bank and you go in and you're like weeks for appointments and you have a condition of financing and come times when people just don't move as fast as you need them to or want them to. So alternative lending tends to function at a on a different set of rules, which allow them to be able to move quicker in
Yeah.
many cases. Not every case, but in many cases. Um, and a lot of times, the alternative lenders will let you know right off the bat, can we do it with the amount of time that we have? And if they
Mhm.
can't, they're just going to say, you know what, let's move somewhere else or whatever. As a broker, I think we have a very good sense of which lenders can move quick and which ones can't. On that note, I've been able to submit a file to a lender on a Wednesday and have it fund on a Friday. That's
Wow.
pretty damn quick. Now, I did have my shit together
Mhm.
and I was able to get everything to the lender that they needed in order
Mhm.
to approve the file. We got the sign up done, like most things happened on the Thursday, so that way everything could go to the lawyer's office and be funded on the Friday. So speed definitely is a reason to consider an alternative lender. And again, it's not permanent. It's not okay. I put you with this lender. Now you're going to be sitting with them for the next 5 years. No, it could be a 6 month thing.
Yeah.
Uh, we're providing a solution. We're fixing a problem, and speed is at times a problem.
Yeah. Not always.
Not always. Yeah.
It's not
Yeah.
something that you should always be in a
Yeah.
situation,
Yeah.
be in such a situation. But again, if you
Mm,
happen to be in one, then this is obviously a good solution.
yep. Yep.
Um,
So would they be more strict on their criteria, do you think?
the alternate lenders typically are strict on the property or the collateral that is required or that is part of the application for the mortgage. But
Yes.
generally they have more accommodating policies around the rest of the parameters. So be it income, we talked about credit previously.
Yeah.
They might also be a bit more willing to overlook blemishes in your credit history, be it about bankruptcies, consumer proposals, late payments, and things of that nature.
Yeah. Would they be more open, maybe in some cases, for like the source of down payment? So, most of it's going to come from my parents or my grandparents or something along those scenarios.
Yeah,
Or I'm buying a rental property and I'm pulling the equity out of another home or various types of things like that.
yeah, they are more accommodative in terms of the sources of down payment.
Yeah.
And also, if you have to deal with like property tax arrears or tax arrears, income tax arrears, those all could be scenarios where they are more accommodative, where a bank would just outright decline you.
Yeah.
There could be other situations where you haven't had the funds for the entire 90 or 120 days that the banks may need.
Yeah.
So alternate lenders could be a bit more accommodative on that scenarios as well.
Yeah. Um and I think one of the other things that really, like I mentioned earlier, I mean, I submitted a file to one of these alternative lenders on a Wednesday. I had it approved the next day, and we funded the day after that. Now, not every alternative lender functions at that speed, but many of them can give you an approval fairly quickly.
Yeah.
So, could be another reason why you're at an alternative lending scenario where you need to get things done super fast.
And things change with lenders as well, right?
Yeah,
A broker who is knowledgeable in terms of what is happening at each lender or different lenders
yeah,
may be able to guide you in terms of which lender to even approach
mhm,
or get your file submitted to, because some lenders may be bogged down by applications at some time and you just want to avoid those at those periods of time,
yep,
right?
yep, yeah, for sure.
So,
So,
Jerome, I think it offers a lot more flexibility from what
uh,
we are hearing, be it income, credit, criteria for getting a mortgage approved, period of time it takes, etc., etc. But what is maybe a downside to considering an alternate lender?
in probably, I'm just trying to think of the percentage. I would say probably about 80% of the time,
Mhm.
alternative lenders are going to cost you a little bit more. right? There are some cases where it might not, depending on what your situation is and what you're looking at. But in most cases, you're going to be looking at likely a higher interest rate cost and potentially also a lender fee. Whereas, generally speaking, with the banks, you don't get that. Now, that's not always the case with banks. Sometimes they do charge a fee, and some of them will have their own kind of alternative side of things, and they just don't tell you that they put you on the alternative side, and next thing you know, you have a fee.
Yeah.
So, generally speaking, most alternative lenders have some kind of a fee structure and or higher interest rate. So that is definitely on the con side of things, the things that you don't want to consider. But it's not always about looking at, oh, the higher fee. Should I just wait and try to go to a bank or somewhere else where it's a lower? That might not even be an option for you anymore, right?
Yeah.
The alternative side might be the thing that you need in order to get you whatever that solution is that you need at the moment. Um, what
There
are
is there is
yeah,
one other aspect that I just want to highlight as well. Even talking about fees and interest rates, right? So
mm,
yeah, apple to apple, the interest rate might be higher
yeah,
than a traditional or prime lender.
yeah,
But if you look at holistic costs, in some situations, it might make sense to take that higher interest rate, pay that 1 to 2% of fee, and
yeah,
still go with an alternate lender as compared to a prime lender. And especially if you're self employed and you're comparing the taxes that you need to pay in terms of
yes,
income tax to
yes.
qualify with a prime lender versus going with an alternate lender.
That's always one of the best conversations that I have. Somebody who comes to us and says, I'm self-employed for a year. How come I can't get the best interest rates like, my friend over here can from the bank? Well, he's paying, 50, $60,000 a year in income tax in order to get that best rate. Or is
Yeah.
that what you want to do? Right? And
Mhm.
and we can look at those situations and break them down for you so that way you can compare. Do I want to pay that much in taxes just to get a slightly lower interest rate? Or does it make sense for me to pay the higher interest rate plus a lender fee versus how much in taxes? We can do that breakdown for you. Keep seeing the
and,
thing and hearing it.
and in some situations, you might be getting a tax reduction on those interest rates as well,
Yes,
bringing the overall cost low.
yes, yes. So we can do those uh, mathematical equations for you and present you with the options to show you the differences if you really need that extra work being done. Um, yeah, and again, it's not always just simply black or white, right? Either you're with an A lender or you're not. It's what makes most sense.
Yeah.
Um, but talking about that file that I mentioned earlier, alternative lending often is a solution. It's a solution to a problem that exists. And the first thing we do is try to identify the problem, whether it's credit, whether it's income, whether it's, you know, down payment related things. Um, what what are some of the things that we can help or with the alternative lending as a solution? How does that help people?
So, one of the things that you obviously need to see is what is the end goal with whatever we are trying to do,
Hmm.
right? So,
Hmm.
if the alternate solution is an interim solution, then we have to work on some sort of an exit plan that borrowers can follow, and in the time period that they have with the alternate lender,
Yeah.
preparing themselves or getting ready to move to a prime lender if that is a desired outcome, right?
Yeah.
Maybe it's working on the credit score or the issues that around your credit history, right?
Yep.
Maybe it is about regularizing the income that you're generating from various sources.
Yep.
And if that is the goal is to move to a prime lender, then working on how to approach that, right? If you go
Yep.
to an accountant, they would say declare as less as tax as possible.
Yep.
right? And maybe that is the solution. But if you want to move to a prime lender, maybe that's not the solution. So figuring out what is the end goal that we're looking for, we work towards that kind of solution or situation
Mhm.
while you have a mortgage with an alternative.
So I think the end goal here, like you said, is figuring out what is that end goal. What is the main purpose of the transaction,
Yeah.
and what is the exit strategy? Even if you're with an A lender, you must have an exit strategy. And the
Mhm.
exit strategy, I would mostly assume, is that you pay off your mortgage as soon as possible.
Mhm.
With an alternative lender, the exit strategy is to balance the costs of the alternative financing with paying down the mortgage and potentially lowering your overall costs, because sometimes paying CRA is actually much more expensive than paying a slightly higher mortgage amount.
Yeah. Or
So,
you are an investor who wants to buy properties. You
yeah,
want to buy 10, 15 properties.
yep,
So if that is a goal, then you would follow a different approach,
100%.
right? So depending
Whereas,
on what is the desired goal and outcome, we work together and put together a plan.
yes, and that is the key thing. We put together a plan, but we give you something in writing to let you know what the plan is.
Yeah.
Most banks don't do that. They're just like, yeah, here is what you qualify for in the interest rate. Done.
Yeah, they're transactional.
Very, very transactional. Even if you talk to the investment specialists and things like that at a bank, they don't very often give you an overall plan. They just say, "Oh, okay, we'll invest in this and invest in that until the next time you come back." And when you say, "I've looked at the investments and they're either performing well or not performing well," okay, well then we'll make a change. Whereas at least from our perspective, we're going to put something down to give you a bit of a strategic uh, flow of what's going to happen, or at least what we believe should be happening.
Well, hopefully they even remember you and remember what you are trying to do the
Yeah,
next time you meet them.
yeah, yeah, exactly. Um, yeah, that's our goal. I mean, so alternative financing and alternative lending in this side is a tool, right? It's just one. It's like grabbing, on my desk, I have a pen for what I do when I'm writing things out, and I have a ruler, and each one of them are used for different things.
Yeah,
Alternative lending is one of these. It's a tool. It's there to help you, or help you move to whatever the next thing is that you want to do.
yeah. It's all about finding the purpose and using the right tool for that purpose.
Yeah. So the next time somebody says to you alternative financing is bad, maybe in direct comparison to bank rates, you could say yes, it's bad, but it's not bad as a strategy when it's implemented properly.
Mhm.
So I would leave you with, do you feel you'd be benefiting from this strategy? Are you getting something in writing from whoever is presenting it to you? Or is it just being, nope, that's all you need? Right? Even as mortgage brokers, we're sometimes guilty of not, and I don't mean me specifically, of course not me, but or Neil for that matter. But sometimes as brokers, we get so caught up in the transaction, we just literally go to providing a solution without any future illustration of what is the plan.
Yeah,
So if you are being placed with an alternative lender and you don't know why, ask the questions, right? Ask your broker, whether it's us or somebody else, why am I being placed with an alternative lender?
yeah.
And you
And
sh-
what other alternatives were considered before that solution was proposed?
yeah, yeah. And what am I going to do to not be with an alternate lender, right? What does
Yeah,
that plan look like?
yeah. So ask the right questions, know what you want to do,
Yep.
and get your shit together.
Always get your shit together. I feel like we should be sending out people with like, the best answers in the question box, get a roll of toilet paper. Hey, you got your shit together. Here's some toilet paper. Like at the beginning of COVID, when all the shelves were empty, we're helping hand them out.
For listening in. We'll be happy to read your comments. So keep sending them in.
Perfect.
Thanks for listening in. Take care.
All right. Take care. And remember, get your shit together.